Good morning, everybody, and this is your S&P 500 day trade setups for today. And just a couple of things we need to focus on at the moment. Obviously, it's the Feds today, so later on today, US time, Fed will come out and tell us that they're raising interest rates. Markets should react to that. Big question is whether those rate hikes have been factored in with the pullback that we've had. More alternatively, is there more coming? So at the moment, we did get this pin bar off a level, and that is a pretty strong level, which is around 4100. And we do have a little bit of divergence here, and we've also sort of got a potential double bottom forming. Now, the only time I'm going to be bullish on this on the long term is once we start breaking above 4300. So 4300 is another clear line in the sand, as you can see if you look to the left, and that would validate this double bottom as well. So right now we are range bound, and that is to be expected going into the Feds. And you can see yesterday was pretty much nothing going on, so we didn't miss much, but it does look like a bit of a flag forming right now. My gut says the Feds have already announced that they're going to have a rates hike today. So I suspect that's going to continue. As soon as that news comes out, you'd expect this to plummet. 4100 and 4,000 are two major levels. If they give way, we're going to free fall. And I think the Fed's also very, very much aware of that, and they're not going to allow that. So the pullback is healthy. It needs a bit of a reset. We've been climbing for so long, but at the moment what we are anticipating is just sideways trading today until that announcement. So if you look at that on the hour, nothing really that you could have traded yesterday. Lots of tails down here, but you're not sure whether that is just algorithms just trading the range because they know it's going to be a range, so they are just buying and selling all the micro ranges. Look at the oscillators. We've got a bit of diversions on the upside now as well. We've got a bit of a flag forming, a strong move down below the 155. Everything here is still bearish as far as I'm concerned. I'm sit on hands until after the Feds, to be honest. There's nothing really you can trade, and if you look at the 15-minute from yesterday, you'll see what I mean. Up and down, in amongst moving averages. That's typical of a major data release. So first you got the Feds, and then Friday you've got non-farm payrolls. So you need to keep your wits above you. Anyway, that's kind of me today, sitting on the sides waiting for this evening. Once the noise is out the way, then we can see whether we are going to sort of form a base up here for another push down, or whether the market has factored everything in and they're quite happy with what the Feds are saying, and the investors are coming back into the stock market. So what we need to do is just wait and see which way it swings, and then trade then with the direction of whatever they've decided. So for me, clear sit on hands. There's nothing really to play around with. There's way too much bearish structure as well. So I'd be looking for bearish setups, to be honest. And we are in an area of resistance if you look to the left. So we'd have to get above that, form a base, and then ultimately get above 4300 before we start looking at this for a move to the upside. Okay, anyway, that's kind of me today. I hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.